Hello and welcome to today's morning market report brought to you by the CommunityFT. So before we get into this market report, it's important to make note of our risk warning. Obviously, trading financial markets using leverage is inherently risky, so please at all times be aware of those inherent risks and make sure you mitigate those as best as you possibly can. Okay, so do take note of our risk warning. Jumping straight into this market report, I'd like to draw your attention to basically two main areas. And the first is that the central banks are firmly in the driving seat this week. So please do expect potentially a very volatile week. Let me take you over to Forex Factory and I shall explain why. So as we've mentioned on Friday's video, guys, we've got the monetary policy minutes from the RBA affecting the Aussie dollar, and we've also got the BOJ with their announcements regarding monetary policy affecting the Japanese yen. And if I take you down to another volatile day, which is Thursday, you can see here at 8:30 a.m. GMT that we're going to get an S&B monetary policy assessment and the LIBOR rate, which obviously will affect the Swiss franc. And again, the big one, which I shall explain in a little bit more detail, guys, very, very shortly, but we've got the FOMC. So let me take you over to the charts and let me show you kind of what the state of play is currently. So this is our S&P. As you can see, it's in a period of indecision. Do perhaps expect, perhaps periods of indecision for the duration of this week up until the FOMC on Thursday. They all seem to be in that particular phase. Now, we might get some movement prior to that decision in preparation for what potentially is to come. So depending on whether the Fed will actually increase interest rates or not. So just be aware that we're largely in a process of indecision in the market and probably consolidation of price action. So again, just having a look at this, we'll have a look at the dollar yen. It's in the same sort of period of price action, but again, that might be some sort of lead up to a potential move. So bear that in mind, please. So okay, taking you back to the presentation, if that's okay, very briefly. The next point is really that all eyes are firmly on the Fed regarding this interest rates increase. So I'm sure you'll probably have absorbed all of the news which is out there. And just to take you over with this in mind to the charts, guys, let's look at four major markets which would be affected by whatever decisions made by the Fed. The first one being the euro dollar. Obviously, the ECB announced a huge quantitative easing in January. So it's very, very a reasonable assumption to make that we could get price moving to another leg to the downside. Certainly if it breaks this diagonal line, and certainly if we start making new lows around the 104 level. So we might get a move down to parity in the euro dollar. And kind of a similar story really with the dollar yen. We might see new highs being made in the dollar yen. That's absolutely potential outcome if there is a rate decision. So we'll see huge, if they do increase that rate, interest rate, we could see a really nice move in the euro dollar, and the dollar yen. But also in the gold, this is the gold chart. So this is your low down here. If we get a break of that, we could get a nice move further lower. And finally, the same applies to the crude oil chart. So that's really what we're saying, guys. The central banks are in the driving seat this week, with all eyes on the Fed on Thursday. So beware. Obviously, protect yourselves at all times and just be potentially prepared for whatever outcome may lie ahead. So thanks very much, guys. And as usual, all we say here is keep learning. So until then, guys, we'll see you tomorrow. Bye for now.